Hi, Sean Hayes of the Hayes Hometown Team with Coldwell Banker Premier here. This is another video in our continuing series on how-to real estate educational videos. Today we're sitting here with Dave Puzniak of Prime Lending here in St. Louis, Missouri. How you doing today, Dave?
Very good. Yourself?
Doing great, thank you.
Good.
Today Dave's going to give us some information on what to expect when you meet with a lender and how to prepare yourself for that meeting. First of all, Dave, when you're considering buying a home, what's the first thing a buyer should do?
The first thing a buyer should always do is contact a qualified lender and get yourself fully pre-approved. And when I mean a full pre-approval, I mean going through the entire process. You don't just want to go ahead and call somebody on the phone and give them some basic information. You want to go through and get your paycheck stubs, your W-2s, your bank statements, all that necessary information in up front so you don't have surprises towards the end of the transaction.
Great. What should they bring to the meeting when they meet with the lender?
Typically, the lender is going to want to see anything that has to do with your income and your assets and your credit. So for your income, they're going to be looking at paycheck stubs, W-2s, federal tax returns. For your assets, you're going to be looking at bank statements, investment account statements, 401k statements, anything that you would have that would be an asset to you. And then if you have any unusual credit situations, you want to bring that documentation with you as well. Things like bankruptcy papers or judgments that have been paid off.
And when they meet with you, what kind of information should they disclose to you?
When you're meeting with the lender, tell them everything you can possibly think about. Everything about your job, everything about your income, anything about your credit, anything about your family that could change as far as information. Divorces and bankruptcies are always big issues when you have to bring that paperwork into a transaction.
And what are some of the major do's and don'ts when meeting with a loan officer?
Some of the best do's and don'ts is essentially listen to everything that your lender has to say. They're going to ask you a lot of questions about the same things: income, assets, credit. And if you can get that information to them in a timely fashion, that's going to help. Anytime that this stuff comes out, they're going to be looking for that information. Some good things to do and not to do is make sure you don't open up any new debt during the loan process. That can always be very detrimental to your debt to income ratio and really changes your scenario.
Okay. And how fast do they need to get the necessary information over to you?
Time is of the essence with a financial transaction. You're set into a contract, and typically most sales contracts are between like 30 and 45 days. In that time span, every day that you lose up front is a day that you could possibly lose at the end of your closing. There's so many parties that are involved in this transaction, from buyer to seller to real estate agents to title companies to appraisers. All these people are on a schedule, and when that information isn't in the hands of your lender, that's a day that work isn't being done on your loan.
That's some great information, Dave. If folks have more questions or need additional information, what's the best way for them to get a hold of you?
Best way to get a hold of me is area code 314-288-2469 or my cell phone at 314-486-2652.
Sounds great. Well, Dave, we really appreciate your time today. And if you guys have any other questions regarding the real estate matters, please feel free to give me a call at 314-591-6808.